Cool. I believe we are live. So give me a second here. I'm going to check the Discord and make sure we're live there. And then I am loading up Bookmap. Just doing some updates. Okay, cool. We'll have that load up in the background. But welcome everybody. Today is June 2nd, 2025. Hope everybody, we took a break last week because of Memorial Day, which is a holiday here in the US. But we are fully back, and we're going to go over markets. So markets, May was incredibly active, and today is marks the second day of the last month of the quarter, right? So Q2, a lot to do, lots to talk about, and get started with. So for those that don't know, my name is Spencer Regal. I am the Chief Crypto Options Trader and Strategist. You can follow me on X at _RIEGLE. You can actually follow our Twitter as well at DARMA Capital Trading on Twitter as well. So we're revamping that. We're getting that up, and then we're going to be posting some stuff here soon. You can reach out to me as well on LinkedIn, just my name, Spencer Regal. And then I'm fairly active there, and then also here in the Discord. So before we hop in, let's make sure we go over some disclosures, because we always start off these sessions with disclosures first, right? And so all information and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results, right? And so what we always like to talk about when we kind of start the sessions each week is only trade with risk capital, right? And what is risk capital? That's capital in which you're willing to lose, right? So if capital in which you're placing trades are going to impact your decisions or your bills at the end of the month, or let's say your groceries at the end of the week, that's not risk capital, right? And we even kind of bring it all the way down to the level that it's going to impact your life, right? So I don't know, let's say you have a date over the weekend. If you make a trade today and that's going to impact that date, and if you're going to be able to go on that date, that's not risk capital. And we don't see that as a good resource of capital, right? The reason for that is a lot of different reasons. One is being a trader is all about managing risk, right? So having your seat at the table is the most important part of trading. And then two is if you have an emotional attachment to that capital that you have, you're not always going to make the best logical decisions, right? So if all of a sudden you have to make a bill and you are being forced out of a trade or forced into a trade, again, that's going to put risk on or risk off in parts of the market in which is not as advantageous or leads you to that emotional kind of risk, right? So that's one thing to talk about. And then we've been talking with Bookmap as well. So let's do a bit of house cleaning. So we do some house cleaning at the start of each session. So Bookmap is running a trading desk photo competition, right? And so you can see that at bookmap.com and then / and then bookmap hyphen desk, right? And so you can see all the cool things that are going on. If you have a cool desk, make sure to post it. If you don't have a cool desk, make sure to post it too. I've had many desks in my time, some that were not so cool and some that were awesome. So it's always fun for us to talk about it as traders, as we do spend an enormous amount of time behind our desk, right? So make sure to check out the competition. It starts today and then ends at the end of the month, right? So make sure to check that out. Some more house cleaning. We start each session now off with a little bit of promotion around our website because we're very excited about it. So we actually are running a discount on specifically to Bookmap. So people here in the Discord, part of the reason is we want to incentivize growth in the Discord, actively engage. I enjoy talking in the Discord. So if you have any questions or you're interested in what we're going to talk about today, make sure to get in the Discord. We're offering 50% off on an annual subscription, but we can open that up and talk about different rates and kind of what works, right? So that's going to be specifically in the Discord. So if you're watching the YouTube on a recording basis, make sure to get in the Discord, right? I am not on the YouTube in the comments, but you can find me here in the Discord and we can talk about all those kind of things. So you can find us over at DARMAcapital.trade. It's about everything in which we do, right? So advisory, analytics, academy, sign up. We offer a lot of free stuff as well on top of those discounts. Just to get an understanding of what we're doing. We're huge on trader assessments, so at the very least get over there and take the trader assessment. It's free. It lets you know a little bit more about yourself as you trade, right? Some traders do better in pods. Some traders do better on their own. Some traders do better with systems. It lets us understand who you are as a trader, and specifically outside of trading, right? So we can understand better how to kind of talk with you and work through some of those things that you are facing. All right, so without further ado, that is the house cleaning. Let's talk about how we approach each session, and that is we take a top-down approach to markets, right? So we go on a macro, we hop down into the weekly, and then we get into the strategy, right? So a little bit about kind of the broader picture, right? We're wrapping up Q2. There's Q3, and then there's Q4. And then obviously, you can't make full-on decisions, right? There's a lot of movement that happens on the here and the now. So that's more about the weekly outlook, and then we really get into the microstructure, and we take a look at Bookmap. Where's that resting liquidity sitting in the book? Where's the alignment with some of the stuff that we look at so that we can start and think about strategies, right? So macro on the top is obviously after last month, we got a massive explosion in the crypto space. Bitcoin hit a new all-time high. Since then, we've seen some pullbacks. And then Ethereum stole the show, right? Ethereum outperformed pretty much almost all of the other coins, all of the other major coins, right? We saw outperformance over Solana, and which has been widely the competition, right? And so we talked about previously last month a lot about what that narrative could be. Obviously, it came out of just a massive explosion of positive news, and oftentimes I like to talk about how markets forward price, right? And so at the beginning of this year and kind of through these declines, we've been preaching about how at some point markets are going to be oversaturated to the downside, right? Fear is priced in at a significant level. And I have another PC up on the left side of my desk that's showing the S&Ps, the NASDAQ, the VIX, and those major U.S. Equity futures, right? And so talking a little bit about that, we saw a massive explosion in the VIX, and then we saw obviously a rapid deceleration in markets. We saw what's kind of that famous night in the bond market where there was a bit of some jitters, there were some spreads opening up, and then all of a sudden the U.S. administration that was playing hardball on all these trade talks has since rebounded and reverted and continued that rhetoric, right? And so some interesting things as we kind of head into the end of Q2 is GDP here in the U.S. declined for the first quarter, right? And so technically speaking, and depends on what news outlet you're listening to at the time, but technically speaking, a recession is defined by two back-to-back negative growth in GDP, right? And so we'll see next quarter how we're kind of navigating through here. But prices, and if you kind of talk around on more of the general business standpoint, right, outside of just markets, if you just talk to those that are trying to raise capital, those that are trying to kind of have start up businesses, capital is tight, right? And you can see that in the form of interest rates on dollars, right? Interest rates on fiat. And so Fed funds obviously are upwards of that 4%. And it's starting to trickle through and tighten up markets, right? So internally, we've done some pricing on some of these interest rates, and it's quite interesting. And so, I mean, some cool things that we'd like to talk about kind of just to start off is talking about the basis trade in crypto markets, right? And so for those that are familiar with basis trade is just the buying of the underlying spot, selling the forward contract, right? Selling that future, and then you're locking in this interest rate. So that has seen a price adjustment higher. As Bitcoin is kind of priced up, we saw upwards of 8% again, and that is a variable rate for demand of dollars in the system, right? And so we use that as a gauge to try to understand where those lending dollars are at. Where's that demand for that demand for crypto is specifically here in the crypto space, right? So that rose. Volatility has rose as well, but we've seen compression here as price has adjusted over the back half of May into kind of June to where we are currently, right? So macro looking forward, positive price structure, and we'll continue to talk about that. We do have some really great questions to kind of talk about at the end of the session, but positive price structure has held, right? And for those that are kind of interested in an outlook, we published a kind of an S&P outlook that we were kind of monitoring a couple weeks back. You can see it here in the, let me see where it's at. Sorry, this is Bitcoin Monthly. We published that as well, but S&P Fact Foundation, right? So if you're interested, we published this on, what was the date? Not seeing a date, but it was a couple weeks ago. So if you're interested in kind of how we're looking at the S&P, which we see as kind of the broader risk, that is up on our website, but we stand by that, right, to this day. So April 2nd, market closed, right, continuation gap. If 556475 contains the move, rejects, then ES is likely to retreat back into the big lower sideways, right? If 556475 is taken out, it is a sign of strength, right? I'm looking at the forward contract. 5954 is where we sit. It's over this, right? Previous year's close is 5935, or sorry, the front month contract, not the forward. 593575, previous year's close. 5982, upside pivot again, right? This upside pivot was was on the quarterly. So again, this is, we're kind of in that bullish case scenario, and market continues to hold, which is positive. And we've seen capital allocation across the board continue, allocation into Bitcoin, and then obviously that appreciation in price across the board. I'm looking at the S&Ps are up 92 bips on the day, or that's the NASDAQ, 66 bip on the S&Ps. And then the Dow is around 27 bips, right? So price structure holds, everything is looking positive, and until there's a reason really to fade the market, and that's first sign is going to be within kind of a break in price structure. 5,800 is where that recent low is. There's no real reason to step in and say, hey, this market has to go lower, right? And the reason markets, as we all know, are kind of rigged to the upside, right? As a sense of security on a kind of broader standpoint. So let's hop in. Let's talk about the weekly price map, some of our weekly outlooks, so that we're not just talking about that macro, and so that we can kind of talk about some of that strategy as well, right? And so let me pull this up. We'll drop this down, and then we have Bookmap here on the right. And let me close off these spot markets. So previously we used to look at some of the spot markets. See, the spot markets is still important, right? If you see some of those cash bids sitting in there, part of the reason for that is cash is a commodity, right? So if the market's willing to pay 8% and you're willing to bid, right? You're willing to use that excess capital, and you're saying, look, interest rates are less interesting to me here, right? And I think that I'm going to get a higher return in an allocation towards crypto, whether that be Bitcoin, whether that be Ethereum. We're monitoring the majors. That's an interesting stance as a trader, and that's why spot markets are always interesting. Derivatives markets, on the other hand, are your capitally efficient products, and so you're going to see a lot more size, liquidity, depth, a lot more activity go through those markets, right? So that's kind of why we talk about it more broadly on the weekly streams. So let's talk about Bitcoin first. On the left side of my screen, you can see the weekly price map. And for those that are unfamiliar, that is our proprietary data and analytics. That is how we see markets and navigate through markets on both a weekly basis, monthly basis, quarterly, yearly, daily, right? We have it across all durations. We talk about, because we hop on here on Mondays, we talk about weeklies, right? Because that's going to be a little bit more of your here and now, and a little bit more of your actionable insights that you can trade on and look for opportunities. So each week we start out with our directional. Directional is that yellow band that you see here, and that is going to be our over-under in terms of price that we see for kind of our price sentiment, right? Our price bias. Sorry, I'm getting my terms mixed up, but price bias. So under 105,367, price is at the very least in a wait and see, look to buy lower. And then over 105,367, momentum trades back on. Where does it go? We target, initially we see that target to target 108,861.5, right? So that's just going to be your recent highs here. But then we also see the target, if we can hold 108,615 up to 112,735.5, right? So that standard extension from that 105,367 is first stop 108,615. Second stop, you can take a ladder up on these red here just to make it super easy, right? So 112,735.5 we see to be that upper kind of normal extension on the week, and that is going to be triggered by, first is previous month's close. So we need to hold previous month's close, which is exactly right where we're at, and base over here, and then we need to base over 105,367, right? Again, we're on a weekly. We see weekly in segments in crypto as Saturday night to Saturday night. So how we see time, we're already Saturday night into Sunday. We're one day in, and by this time we're almost 2 days into a 7-day session, right? So it's almost 33% of the way done, right? A little bit less. So almost a quarter of the way done, 25%, right? So as price takes time to go through this, the key here is timing. Then obviously those upside targets remain in question, right? So normal extensions, 105,367. If we can base here, immediate target we look at is 108,615, 108,861.5, and then immediately our eyes go to the next red ladder higher at 112,735.5. If time goes by, right, and we get into kind of that Thursday, Friday, we start to downsize our targets, right? Part of the reason is as time goes by, it's less likely that the upside targets are going to maintain. Similar to volatility markets that we see in options, there's a compression within the expectation, right? First part of the week, that's when the most edge is within time and within structure. As time goes by, that tail, that delta, right, that 10 delta quickly decays to like a 1 delta, right? And so that becomes a far less priced in outcome. So tonight, what are we looking at? We got to hold 108 or 104,800. That's positive if we can do that. In a perfect scenario, 105,367 is tested overnight and held. And if we can transition through 105,367, next we're going to look at these half ladders here, previous week's mid, 107.14, and then 108,861.5. 108.61 is our expectation. However, if we start rejecting a little bit lower, that brown band, that's a signal to say that this market at the very least is in a digestive trade, and those are reasons to look at volatility. Those are reasons to look at some of that call skew that's currently baked into the market and say, look, the outcome or the optimism may be less likely, right? Next is the downside. That green band, it always changes, right? Each week it changes. And so the fact, and when I said our price bias is saying Under 105,367, our expectation is the market is still going to remain in a bullish outcome, but it's going to remain in a digestive bullish outcome. The reason for that is that green level is underneath the directional. We see this, technically speaking, as a positive sentiment bias with all of the buying power loaded up here, right? So our expectation is if the market breaks, the buyers are going to be sitting here, and that is going to remain intact, and the uptrend remains intact, and this level should be supported, right? And so for all that reason, under the directional, that price bias just means that look for lower, where those lower likely outcomes. We use majors, right? It's kind of why I was talking about that 108,861.5. That major on the downside is at 101,114, and that second major on the downside is going to be that 97,240.5. Expectation is if the uptrend is going to remain intact, especially on the weekly basis, 97,240.5 needs to hold. If it doesn't, it's not a market to remain long. That is a market to be concerned about for a what if potential lower targeting 93,366.5, right? So 104,800 is that here and now, kind of that structure that we're talking about for the overnight. If we can base here going into tomorrow, Tuesday, then the upside potential is there, and that momentum to carry into the third of the month is there. We see an increase in volatility to basically start anywhere from the first of the month through the 20th of the month, right? And so 25th of the month, right? And so it is not a time to look to compress fall. At the very least, it's a time to look for opportunity on expansions. Is this market going to kind of race higher, or is it not? So that's downside outlook. That's upside outlook on Bitcoin. Let's take a look at Bookmap just to get kind of more of a microstructure. So we always look at Bookmap to try to understand where that resting liquidity is, right? And so it's one thing to have data and analytics. It's another thing to back it with resting bids and offers in the book for increased signal acceptance, right? 97 we talked about as our expectation for those buyers to sit in the market. 97 is where you have resting liquidity. There's a reason for that. And so if we get down to 97, monitor that resting bid, see if it's legitimate and if it's willing to buy the market. And then if it is, this green band on all time frames is always the best. What we see to be the best risk reward for deploying risk capital, right? So we start each week talking about risk capital, and then we get into the kind of more that intermediate time frame on that weekly basis of where we see if the opportunity presents the best opportunity to deploy it, right? That we see here at 97,240.5. Under it into this black zone is a reason to be concerned. And so that's that weekly outlook to the downside. On the upside, again, we talked about 108,861.5. Direct alignment with what Bookmap has here on the offer at roughly around 109. And so that's all encompassing here in that red band, right? And so again, where do we see the upside? 112,735. Not really a lot of resting liquidity there, but Bookmap sees it up at 115, and that's somewhat in the middle here. So there's not direct alignment there, but we are directly aligned on the upside expectation, the initial upside expectation of 109, right down to 97. Let's pull up Ethereum. As well. Okay. We'll zoom out a bit here on Bookmap. Again, what's the level we start the week at? Directional, 95.3630. Ethereum outperformed last month. It is over the weekly directional. So the price bias is positive sentiment bias is positive. As long as we can hold 25, 36, 30, upside targets are intact, right? Where are those upside targets? Again, we're looking at the majors. Keep it super simple. 27.08.35 to 28.96.17. Timing matters as we progress through the week, back latter half of the week. If we continue to just chop around this range, start looking at those minors of where that containment is going to be, right? So we can actually just isolate the minors to just take a look at where that tighter range would be prior to last month's large expansion in trade. We have remained in these minor levels, and price has been boring for the most part, which is advantageous to volatility sellers and volatility harvesters. On the downside, let's talk about the downside as we kind of transition around this directional. In a perfect case scenario, we always want Ethereum to go higher. However, we are still down on the year to date, technically speaking. So let's talk about the downside. Under 25.36.30, next target is 23.32. Again, this green band here is where we expect all the buying power to exist, to remain, or to keep the uptrend intact. So if we get a trade down to 24 or 21.4490, that's where we see the best deployment of risk capital to be deployed for that rebound and for that bounce in markets, right? If we do get a trade down to 21.4490, there's going to be a lot of fear, right? Because all of a sudden we were 1,800 last month, and now we priced all the way up to 27.5 last month. Massive expansion in range, and then 24 or 21.4490. Those that are getting involved again in crypto and in Ethereum specifically, they wrote it off and they said, "Look, it's under 2,000. I'm so concerned." Now they want to get back in at 2,500. If we price all the way down to 21.4490, it's around 400 points lower, which is an expensive trade, right? So keep the risk tight, but the market still remains in an uptrend. Again, that would be a normal digestion, and as long as we can hold that, that's still positive. Let's look at Bookmap. Where is it at on Bookmap? So we talked about downside targets. We have those up right now. So let's look on the downside. 23.40 basically, which is in direct alignment with that first target. Again, there's a reason for that. We oftentimes do align. 22.25, right? 22.5, sorry. So 2.25 on the downside. Just right in the middle. We don't have an alignment there, but we do see more of that buying power from our side to be 21.4490. So keep a lookout there for that target. And then on the upside, let's talk about the upside. 25.70 is where you see some resting liquidity. However, that's basically just today's high. It's kind of, I mean, obviously if it sits in the book and it rejects, take a note of it, but that would play to more of that really tight range. Ethereum tends to move a bit more than just 30 points, so we're looking higher, and the book over that is light, right? So 27.0835 as we talked about, and then that upside of 2,900 roughly is where we're looking. So that's kind of the Ethereum outlook for the week. And then let's open it up. We had some questions come into the Discord today, so I'm going to answer those, and then if anybody has questions after watching the recording, feel free to reach out here in the Discord, and I'll get to those as well. And I may even do some more sessions on the week, so we'll see. But let me see where we're at here. Dan had a funny comment. He said, dating itself has more risk than trading, in my opinion. Indeed. Indeed. So, all right. So perfect. Some great questions that came in earlier today. So I said I'd answer them in the stream. So let's go through them. Things. What exactly is a sell DR critical range breakout? Right. So we'll talk about that. Let's pull up the price map here, and the price map. For those that are familiar, and if this sounds kind of foreign, we actually do have a ton of free education on our website under that sign up tab that we talked about at the beginning, about all the analytics, everything involved. So you can go over to the academy here. Let me load it up real quick, and you can go through Analytics Insight. Right, and there's a ton of stuff here, right? So specifically what's talked about here is going to be a sell DIR, CIR, critical range breakout, right? So you can go down to critical range, and you can see a ton of documentation around this that we just have listed for free. So after I kind of go through it, if you have any questions, absolutely make sure to go to the website and take a look at what we have to offer for free. So specifically on this, there's two components, right? So there's the directional breakout, and then there is the critical range breakout. Oftentimes we see them to be paired together. And so the directional breakout is trade that holds the directional breaks out in over the directional figure, over this dash line, and then is in this black, right? For it to remain valid, it needs to hold structure, right? We always use price structure as well with the price map analytics to get an understanding of risk, right? A market that's doing this, which is basically just digesting around the directional. The directional is a key point. The directional is a key figure for the week. There's two outcomes. One is trade we see to originate from the directional, and it's either going to break out or it's going to remain digestive, right? And so a directional breakout is to the upside or to the downside. So technically speaking, we are right now in a downside directional breakout, which would target down to the DP. And then that DP, what we see the critical range to be is the UP down to the DP, right? So directional breakout targets the DP. That's a 1 APMD lower. We see APMDs as average price map distance. All that means is this yellow line down to this blue line. We already have it all written out for you on the charts. And then you pair that with a DP breakout or a critical range breakout. That targets that 1 APMD lower as well as the initial target for 97 to 40.5, right? So it's a bit of 1 + 1 is how we see it. So 1 APMD triggers another APMD. If the momentum is going to continue, again, it's going to target the 2 APMD move from the directional breakout, because it's always situational, because we have our R level here. The expectation is that the DP breakout is actually going to be held here, and that directional breakout, if you get the full directional breakout, it targets the R level, right? You can see it here as directional notes, right? So most favorable time for to trade using the directional is the start of the session. Another good opportunity is to trade using the directional. Directional is after a critical range breakout with the aim of achieving profit at the UP or DP, extreme levels being the critical range, right? So you can see here, and let me blow it up for you, is a directional paired with the R level, which is that green level. Again, we talk about how that green level changes. That means that the market's ready for action, right? We see that as the optimal time to look for kind of that expansion in trade, right? And so with the green being at the directional, that is a reason to start looking for the expansion higher. If it does, where is it going to target? That UP, right? That's that directional breakout. Immediately, if it targets right through it into this black area, that's a UP breakout. Where is it going to go? Initial target here is that CRX plus, right? And a held trade over the CRX plus validates the UP breakout, which targets the UT1. If I pull this up, you can see the UT1 here, but you can also see if I have the miners here, held trade over the CRX plus, which is that pink, targets the UT1, right? So these are all kind of trading strategies, but it's a pairing of the both. So directional breakout plus the critical range breakout. Okay, the next would be, how does the sell directional fade strategy typically work, right? And so that's kind of alluded to here specifically in the beginning of this, which is using the directional at the start of the session, right? So we kind of talked about as price just chops around. Right now we are in the first 25% of the session. Therefore, the directional over under, looking for an expansion range. As we get into the latter half of kind of the week, directional then becomes more of a choppy figure, and then it is less optimal, right, for kind of that expansion. So using a directional fade, let me see if we have an example up here. Fade. Let's do fade. These are so there's two things to look at. There's critical range fades, right? So UP fades, DP fades, all the way up to directional fades, all the way up to the UT1 fades, DT1 fades, and also upside target reversals. So these are all covered here, but let me, without kind of extending it significantly, let me just show it on the chart. So a good example of a directional fade would be a market that creates a UP breakout, right? Which is a suggestion that the market has positive strength, right? So all of a sudden, let's say that tonight here in Bitcoin, we price over 104,800, which looks like we're doing here and now. And we price through, and then trade extends all the way to 109, right? And we get that extension up to 109, 110, which is a UP breakout on the back of a directional breakout. And then immediately it fails and rejects, right? That rejection basically says that the market is at risk and can immediately pull right back down to 105,367, right? Which is a UP reversal. That turns into a directional fade, right? So the market shows positive strength, it shows willing buyers, and then it retraces right back to where it came from. That's a buy. That's a directional fade, right? Where is that then in alignment? 105,367 needs to hold. If it doesn't, all the way down to basically the previous month's close, still keeps it in alignment. However, positive price structure down to the tick is optimal for that strategy. So these are all strategies that are covered. So if it is a bit over your head or a bit kind of in the weeds, make sure again to go on the website. It's all explained there. In the context of strategy themes, it says, here's the third question. In the context of strategy themes, it says that the optimal structure is considered a hold structure while the hedge theme is linked to a break structure. Does a holding or breaking structure refer to holding or breaking the directional, or does it mean something else? Specifically there, it just means price structure, right? So oftentimes we pair the price map with price structure, right? So we don't overcomplicate it. What do you think about when you're in a bull trend? Higher highs, lower lows, right? Just keep it relatively simple. In a downtrend, right? A bear trend, lower lows, and then followed by lower highs, right? We're looking for perfect markets to take risk, right? So here is a perfect example if we were to blow this up. This is positive price structure from the directional, right? Market starts off, goes through 25% of the session, choppy, not really a lot of opportunities here, right? You get a UP fade here, targets the directional. You get a base at the directional. Where are we going to go? Back to the UP. Okay, great. We produce a UP reversal. UP reversal comes down to the directional, but because we didn't break this out or break this structural low, market can go higher, right? And so this is kind of more of that technical approach where it's higher highs, lower lows, basically inching its way all the way up. Here's a UT2, right? And so a perfect example of kind of not a optimal price structure is this example here, right? You get a break under, then a break over, break under. It just is choppy, right? And so that's a break under and then a break over. That's a structural break, right? That's not a downtrend. That's basically suggesting that the downtrend's reverted, right? It's fair to take a stab at the uptrend here, but again, just because we broke under again, keep the tight stops and then keep it tight. This is an opportunity for churn in spot trading, and the most important part here is always to keep the risk tight. And so when we talk about risk capital and when we talk about deploying risk capital, markets need to perform optimally. What is an optimal market? Directional breakout here, right? Hold here, up here, right? There's your first target. Maybe you take some off the table, come down here. We don't break down underneath here. Cool. That means upside still in play. Extension rapid higher. We come down to the tick and hold. Next target to the tick, right? Target 2 obtained, right? Market's not done. Maybe you take a little bit more off the table here. Market's not done. It starts to base over here. Naturally, where's it going to go? Next target to the tick, right? Maybe you take a little bit more off there. Our life is easier in markets when they perform optimally. So we might as well treat risk the exact same. If they're not performing optimally, size down. So those are the questions that were in the Discord, and we'll kind of leave it there. It's been a long session, but they were pretty good, and they were all talking about the analytics and kind of the strategies around the analytics. So if you have questions on those, we've loaded it all up onto the website. It's free, and then also a 2-week trial is free on the analytics. So feel free, dive over there, check it out. And then if you have any questions, you like the analytics, you like everything that you see, get in the Discord here in Bookmap, and then ask or reach out about discounts on those as well. So enjoy the week. Good luck for those that are operating in markets. And then either I will be on potentially again or do a short recording later this week, or I will see you next week. So